So ARM IPO is one of the most anticipated IPO of the year, if not in the last couple of years. Now, whether or not you should be buying this company the day it goes public remains to be seen. In my opinion, no, and I'll try and make the case. Of course, you remember NVIDIA wanted to acquire ARM not so long ago for $40 billion. Now, back in 2016, Softbank actually took that company private at around $32 billion, and its last private mark was around $64 billion. Now, is it worth $64 billion? Should you be buying shares of this company at $64 billion in market cap? Well, you'll see by the numbers that there is huge potential, but there is a correct price to pay for it. Now, according to Reuters, the IPO could value the company between $60 and $70 billion. ARM's owner, Softbank Group, was previously planning to sell between $8 to $10 billion of shares, but it may now sell less than that amount, according to Reuters, and could keep a stake around 90%. Now, before we go and jump into the numbers, let me explain a little bit what is ARM and how they actually make their money. So ARM is a semiconductor and software design company that designs ARM processors, which are used in a wide variety of electronic devices. By the way, it is a British company. ARM processors are based on a RISC architecture, RISC not with a K but with a C at the end, which makes them simpler and more efficient than the CISC processors. They are also designed to be low power, which makes them ideal for battery-powered devices. ARM is a fabless company, which means that it does not manufacture its own chips. Instead, it licenses its designs to other companies who then manufacture the chips. Now, how does ARM actually make money? So they make money through a licensing business model and software development tools. It licenses its processor designs to other companies who then manufacture the chips. ARM charges a two-part royalty, an upfront license fee and a royalty on each chip that is manufactured. The upfront license fee is typically a one-time payment, while the royalty is a recurring payment that is based on the number of chips that are manufactured. Now, to explain it in a bit of a simpler way, I took a great example I found on X. Basically, let's say you're a chef, you have a recipe. You are basically giving that recipe away for a fee to other restaurants. Now, those restaurants can tweak that recipe a little bit, and every time somebody buys that meal, the original chefs, they get a percent of that as well. So that's basically ARM. And here are some points that might explain why this company is valued at $60 billion despite their financials not really growing year over year and sometimes actually declining as well. So they have 96% gross margins and 26% operating margins, 99% market share of the mobile application processor chip market, 48.9% market share in the aggregate processor chip market, 70% of the world uses an ARM-powered product, and ARM itself ships around 30 billion chips per year and has shipped a total of 250 billion chips. So, you start to understand the hype behind this company. Of course, that's very, very impressive, but again, I like to remind you there is a price to pay for it, not any price. Despite the CEO being extremely optimistic about this company's future, because he did say that wherever computing happens, ARM will be there. And so let's have a look at the market opportunity. So for the calendar year ended 2022, they estimated that the total addressable market was approximately $202.5 billion, and they forecast that their TAM will grow at a 6.8 CAGR to approximately $246.6 billion by the end of the calendar year 2025. And if we're looking at their financial statements, you can clearly see that there's still a long, long way to go for them to grow. Now, $70 billion in market cap, and this is what you produce. Total revenue 2023, $2.67 billion. In 2022, $2.7 billion. So you're basically down year over year in revenue. Yes, you are up since 2021. Then gross profit, basically flat year over year. Operating income up just a tiny bit, $38 million. And then we have net income, which is actually down year over year. Of course, chips being extremely cyclical, COVID pushing everything forward, supply chain issues, lockdowns in China, etc., etc. We've seen this with the other players as well. High inventory, I mean, you name it, the excuses were there to be used. So, okay, maybe that's why they're not growing or basically declining. Okay, fair enough. But then why should I pay a premium for that? Just doesn't make any sense, right? If this were a publicly traded company, it would probably be down by quite a lot. But since it's private, since there's lots of hype, NVIDIA, AI, Softbank, I mean, you start to understand why. Now, a couple of extra things I want to mention here, and that's with regards to the royalty revenue, the way the business is working. So they typically are able to command a royalty for the chips that contain their product, which creates a long-term recurring revenue opportunity from each design win. They typically see sustained revenue streams from older chips, as you can see on the picture. As results, products containing those chips continue to be sold and older processors are incorporated into new chips, creating a cumulative effect that fuels long-term growth. For example, based on royalty revenue information provided to us by customers in quarterly royalty reports, approximately 46% of the royalty revenue for fiscal year ending March 31st, 2023 came from products released between 1990 and 2012. Additionally, as we transition to more ARM Total Access and ARM Flexible Access licenses, we expect more of our products to be incorporated into more of our customer chips designs and our royalty revenue to increase over time as a result. Now, what do those two new things actually mean? Well, first up, ARM Total Access Agreements. Under an ARM Total Access Agreement, we license a portfolio of CPU designs and related technologies to a customer in return for an annual fee determined at execution of the agreement. We retain the right from time to time to add or remove specific products from the package. The agreement is for a fixed term and may limit the number of concurrent chip designs that may use products from the package. Okay. Then the other one, ARM Flexible Access Agreement. Under that agreement, they license a portfolio of CPU designs and related technologies to a customer in return for an annual fee determined at execution of the agreement, so the other one. Unlike an ARM Total Access license, here the package of products licensed pursuant to an ARM Flexible Access Agreement will not contain our latest products, although customers are free to experiment with the products contained in the ARM Flexible Access package. They must pay a single-use license fee for specific products if they include ARM products in a final chip design tape-out when the final result of a semiconductor chip design is sent for manufacturing. As with an ARM Total Access Agreement, we retain the right from time to time to add or remove specific products from the package. Now, as you can see in recent years, royalty revenue compared to license is doing much better, and I do think that those two new models is going to help the business in the long term. So to conclude, are you willing to buy ARM's IPO at between $60 to $70 billion in market cap? By the way, this could be the price of the IPO, but we all know what happens on the first day. Usually the stock jumps quite a lot. So let's say it goes over 70. Are you willing to pay that price for this business? Let me know down in the comments below. My answer here is no. I don't think someone should pay more than $20 billion, let's say $25 billion in market cap for this business today. Of course, if we're going to see in the future that suddenly growth is reaccelerating by quite a lot, then okay, fine, it can earn a premium. But currently, it doesn't show anything that warrants a $60 to $70 billion market cap. So that will be it for this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.